Welcome everybody to another eye opener. This Market Wealth Daily's quick little video chat. So we do with top traders. We got Blane Markham here with us today. Blane, good to see you. Hope you're ready for a wild day in the markets. Wasn't exactly sure what to expect this morning. Got news of the shutdown, and then just watching this market kind of just do its thing. It is
Yeah.
barely blinking at that, which is you both exciting and unsettling. So want to get your take on it. Also wanted to thank you very much for a great trade that you spotted just the other day. Monday was, I think,
hmm
Johnson and Johnson set us up with a really nice winner. I know it was up in the 30% range yesterday and then opened up again this morning. So just a nice little paycheck for everybody if they were tuning in. And if you're not tuning in, that's exactly why you should tune into these. Be here live, get these trades as we're spitting them out, and get in on the action early. But we're going to jump into today now, and we're going to see if we can find another one in a market that, if you didn't look at what the chart was doing, you would say it would be a crazy day to even be considering the market. But chart's doing what it's doing. So love these predictable patterns. Blane, what are you seeing?
Yeah, absolutely. Well, thanks off, just first off, thanks for having me again here, John. Excited to be here for today's eye opener. And you're right. We talked about when we sat down on Monday last time we were together and, talked about the threat of a looming, government shutdown, saying that, historically it's been largely a non-event for markets. Most times, even for the ones that, extend for several days or weeks, uh, generally it's not been a big, a big event for the markets. It's largely been kind of shrugged off. And so far, that's kind of what we're seeing. The factor where I think it could become a little more interesting for markets is if this does persist for several days. Of course, we have at least scheduled, right? We're supposed to get the updated jobs report on Friday for this past month for September. The market is really anxious to get that data because it's a key data point for the Fed. If this shutdown continues to persist through Friday, then we're not going to get that on time. So if that data is delayed, we could see a little bit more volatility around that. But yeah, as you said, go ahead and hop into the charts. As of right now, the market is just marginally, and I mean, John, when I say marginally, I mean just by like 2 or 3 points off of the all-time closing high on the S&P 500. You can see it right here. I mean, yesterday, things were looking, very much like we were heading into this shutdown. We closed near the highs of the day. We opened slightly lower today, but have rallied right back up. And again, we are points away from being on pace to set a new all-time closing high on the S&P 500. So, the charts, they're largely ignoring this right now. It's largely, not really a factor, in what the markets are doing in the market's behavior right now. I think we still have the possibility that it could become a catalyst for some volatility later in the week. But right now, chart looks pretty great, John. We have a still confirmed great long-term uptrend going on right here. The market's still powering higher towards new all-time highs. Still making that really constructive 2 steps forward, 1 step back type of trading. Making the higher highs and higher lows. So everything I'm seeing right here, despite all the noise in the media, all the headlines, things like that, it hasn't quite bled over to affecting price action quite yet. So encouraged by the resiliency of this market.
Yeah, no, it definitely, we've said it a couple of times over the last couple of weeks now. I even think we referred to it Monday. It's wash, rinse, repeat. The pattern is just doing its thing and chugging right along. And as a trader, that pattern is what you just dream for, to be quite honest. I mean, if you have a very predictable, very repeatable pattern going on with signs as to when it's going to do what it's going to do, what more can you ask for? Now, uh, that's all great if you're able to tone out the noise. And keep in mind, this is the index. This is not each individual stock. You have to find the winners in there, and not all of them are going to have these kind of huge moves. These are looking even at the S&P. Yeah, it's hitting all-time highs, which sounds extreme, but these are small moves. These are not huge, wild, crazy moves. I mean, I'm trying to look at where the VIX is, but it's not that high. It's in a
No.
pretty moderate range. So we're not seeing a huge amount of volatility. The VIX is based on what traders expect the volatility to be in the future. And at this point, it doesn't look like they're expecting it to be any more volatile than it is. So let's take a look at how we tone out this noise. I know you typically have some tools that you bring in and share with us and show us how we might be able to kind of shut that down and just look at the price action and look at what people are doing and using that to drive us to the next trade.
Sure thing. Yeah, exactly right, John. That's why, that's why we focus on the techniques and the charts as technical analysts. Again, when you get in these really noisy, really loud periods, there's a lot of headline risk and things flying around that are, maybe sometimes even a little, over dramatic. God forbid something is a little over dramatized in the media, but that's what the charts are for. The charts, they are reflecting what people are actually doing in the markets. They're reflecting the price action. And certainly while all those things can tie in and affect price action, we're focusing on this because this, ultimately at the end of the day is what matters, right? We're all, trying to seek that price action, trying to find those stocks that are moving up, trading in the way we want them to. And, again, so that's what we're seeing on the charts. We see that underlying trend really strong here. We do have our Keltner channels here as a, overbought, oversold indicator, John. We do see, the index starting to trend back a little bit higher. I think across the board, we had a new all-time high close on the Dow yesterday. We were, again, pretty marginally off of that with the NASDAQ as well. So, on the three major indices, we're starting to kind of creep back up into that short-term overbought territory. Now, again, as we have, well communicated in the past, you can remain in that, above the upper channel for, several days or even weeks at a time, but, just meaning that, things are running a little far pretty quickly. So, we are kind of getting back up into that, higher kind of elevation level of trading there. And that's why I'm actually going to pivot to something else for our trade idea for today. So, John, typically we always have a pretty heavy U.S. bias here in this call. I know most of our viewers are, heavily focused, if not primarily focused or solely focused on U.S. markets, U.S.-based stocks. But this year, of course, we all know the U.S. market has performed quite well, has, pretty nice return on the year, depending on which index you're looking at, it's up quite nicely. But there's been other areas that are working quite well around the world. And it has not just been U.S. markets that have been performing quite strongly this year. I mean, there's developed markets all around the world, whether you're talking about each individual country across Europe. There's many European countries that have performed really well. Japan, you're talking about Korea. But here's one right here. This is actually the Chinese market. So this is a Shanghai stock index composite or composite index, excuse me. So this is the main primary stock index in China. And, of course, it's, comprised of, Chinese stocks. And so you can think of this kind of like the S&P 500 of China. So that's a good way to think about this. And so as you can see, it kind of started off the year a little bit muted. It was in, pretty consolidated, choppy trading here, just, staying within this range here. But once we started getting out to the back end of April and through May, you can see it started to break out of that consolidation range. It's finally started to break higher and really started to gain some steam in, mid to late June. And ever since then, it's breaking out to these new highs here, making it just a very impressive series of higher highs and higher lows. Currently, the overall index, you can see, has been, again, stuck a little bit range bound here lately. But again, it's right on the precipice of breaking out. I believe this actually may be just a couple points, again, away from breaking out to a new all-time high, closing high here on this chart. So some really encouraging trading from many different developed markets around the world. Again, we're focusing in on the Chinese stock market right here. And John, the way I look to trade this, is actually with this ETF right here. This is the iShares China Large Cap ETF. The ticker is FXI. This is probably one of the most well-known, ways to play, the Chinese markets here in the U.S. This is, it's a very liquid. There's been already 8 million shares of this traded today. It's a really heavy volume, super liquid ETF. Again, it's comprised of Chinese large cap stocks. A lot of names you probably are familiar with: Alibaba, Tencent, JD.com, NetEase. Some of those, really major Chinese tech players. Those are the primary stocks in this index. And you can see the performance in this index has actually been even better than their overall stock index. So, excuse me, the ETF has been better than the index. So just really impressive series of higher highs, breaking out to new all-time highs. Kind of had this, massive ramp higher right here. Then, FXI cooled down. It traded back into our Keltner channels right there, roughly down to the middle channel and is now starting to rally yet again. As you can see, it started to pick up some momentum and start trading higher from here. But again, you can see a really powerful trend line, buy signal intact here. You see our 21-day trading above our 63-day EMA right here. Really nice wide gap between the two, those signaling that strengthening buy signal and, ramping up of momentum behind the price action in this ETF. And again, it's trading within our Keltner channels right now. So even though the ETF shares are starting to reaccelerate, beginning to trade higher and gain some more momentum to the upside, we're still not trading in that overbought territory quite yet. It's still just below that upper channel. And that's confirmed down here by the RSI chart as well. We can see it's a spiking RSI, confirming that upside momentum. But again, that RSI is not above the level of 70 quite yet. So this is offering a really attractive entry point for a bullish trade on this Chinese ETF. And, John, you think about it, at a time right now, again, the markets here in the US have largely shrugged off the government shutdown risk. But, as I said, there is the potential for this, if it persists longer throughout the week. We start getting delays on really key data points that the market is really anxious to get. Could certainly expect a little bit of short-term volatility here in the U.S. And, given that we always have a very strict, almost solely U.S. bias on the trade ideas and what we're covering in this call, that's why I kind of wanted to pivot to some of these other areas, around the globe, around the other developed markets that have been working really, really strongly this year. Clearly, you can see the really strong trend here in this Chinese large cap ETF right here. And John, actually, the way I look to play this one, it's a fairly low priced ETF. It's only, about 41 bucks, just a little over 41 bucks per share, as you can see right here. So it's, pretty low priced, this ETF, and it has weekly options available. So, again, it's a very liquid ETF. It's a really common trading vehicle to get exposure to the Chinese equities. And so I actually landed on this option expiration date right here. So it's October 31st. This is just about a month out from today. So it gives you, a little bit of runway for this trade to work out. Sometimes, these things do take longer than a couple days. They don't all work out quite as quickly as the J&J trade from Monday worked out. That was exciting, but sometimes they need a few extra days to see that trend continue to, break out and form. And so I landed specifically, John, on the 39 strike call right here. You can see it's just a couple points in the money. But again, since this is a pretty low price stock, our 39 strike call is down here. It's below our lower channel, pretty well in the money. But it's only coming in at a cost of 2.74 points. So, $2.74 or, $274. It's, very, very, price efficient option to actually play this really strong bullish trend. So this is the option I'm going to look at, and I'm going to place it here in just a second. But I did just want to show everybody just a snapshot of this in the calculator right here. You can see all of our trade data input into here. You can see, if we continue to get some nice outperformance by the FXI ETF to the upside, you can see this, has some really nice potential. If we start to get a, pretty big move between here and, over the next month, this trade does stand, to have some really significant upside if it does continue to work out. So you can see in these, different price change scenarios here, if it's, up 7.5% or up 10%, just looking down those columns all the way to the bottom, you can see the possible profit potentials there. So, some really nice possible upside with this one. I'm going to go ahead. I'm just going to place one contract to this. But just going to go ahead. It's a nice diversifier too, John, because again, like I said, we're always pretty heavily focused here, in U.S. markets. And so a lot of the trades we're always looking at considering here, a lot of the trades I take are, very heavily U.S. market, U.S. market focused. So, having a little bit of, diversified different market exposure here, that's another nice thing about this trade. So I'm going to go ahead and place this one. Definitely anticipate getting this one filled. Not too much difficulty. May have to bump it up a couple cent, but pretty marginal difference at what I think I'll have to move it up to. So that's my trade for today, John.
So now that's a good one. Great to point out that there are options, that kind of give a little bit of insulation against the impact of the shutdown. It is real. We do have some big numbers coming out tomorrow, non-farm payroll, I believe, right? And it's something that in conjunction with the shutdown could, create a cocktail of kind of the bears really feed on and enjoy, and give it enough to pull this down. When you're looking at that S&P chart again, you saw that it was starting to get a little frothy, and we've seen the pattern be consistent. It gets up into that above the top Keltner channel and looks to take a little bit of a breather and pull back down. That could be what we're going to see next. And then, we always keep an eye on that recent low. I believe it was like last Thursday or something, is a key number that we're watching to know where the panic button is. We don't want to hit it too early. And if you listen to the headlines, they'll have you hitting it all day long. But we need to have a very objective view of that kind of escape button to hit and be ready to get out. In this case, though, this is a great way to say, look, even if things do get a little wild, this trade could still form well in spite of all that. So great to give us an option to look at. Of course, based on the recent record, you had a couple winners now in a row. We're really excited to see this and see it play out. Hopefully, again, as we hope for all of these, that it gives us a little bit of a payday here. We love seeing that stuff and seeing how that works. And, I hope everybody's grateful for it when they're tuning into these events. We want you to tune in again. We want you guys to keep an eye out too. If you're not signed up on our Telegram channel, we want you to do that. And, I think that's for most of you folks find out about this. We're going to be talking about a couple events coming up starting on Sunday that I think are going to be really exciting. I know Blaine and I are working on one for this Sunday. That's a pretty big event. So we're going to get the news out about that on Telegram. Keep your eyes open for it. We'll be letting you folks know how you can be involved. We want people like you who are engaged, paying attention, and looking out for yourself. We want you in that room with us because we're going to have some good stuff to share with you. But
Absolutely.
Blaine,
Yep.
yeah. So, and I was just going to say thanks for the time and for the great insight and the great trade ideas. So grateful for all of that.
Yeah, absolutely. Well, again, thanks for having me here today, John. I always love getting to sit down and, kind of talk through, what's in my head, what I'm seeing in markets, and then, point out to folks, a few trade ideas of, how you can still find some opportunity out there. So, glad the last several have worked out. It's always great to see those, continue to, it's always nice to see it, plan unfold how you like it to. So, hopefully the same case here with the FXI trade. Definitely keep a close eye on it. And like you said, some exciting stuff coming up this weekend on Sunday. So really looking forward to that too.
All right. Well, everyone have a great day trading and keep your eyes open for us. We'll be giving you more information and more actionable stuff that you guys can take advantage of. Thanks again, Blaine.
Yep, absolutely. Thanks, John. Take care, everybody.